All right, we're going to go ahead and get started. So thank you guys so much for joining our webinar, the Data-Driven Investing, Leveraging Alternative Data to Power Decisions, co-sponsored by SimilarWeb and CrunchBase. So for today's webinar, it'll be broken down into 4 parts. So we're going to start with just a brief introduction to SimilarWeb and CrunchBase. And next we'll dive into the new partnership between these SimilarWeb and CrunchBase and what that really means for you. So we'll go through a bit of the CrunchBase platform and highlight how investors can access both data sets now in one place. Next, moving on, we'll look at some really interesting insights around 2 private companies, Wish.com and 23andMe, both with valuations well over $1 billion. And we're going to dive into some of the digital success that they've had and how investors can kind of analyze that success and do the same analysis for any company using SimilarWeb and CrunchBase, and effectively helping them make smarter and better decisions. And then lastly, we're going to open it up to the audience where we're going to have a Q&A, and we'll cover all the questions that are asked throughout this webinar. So please ask us questions throughout the webinar. You can use the GoToWebinar panel. You can ask either CrunchBase or SimilarWeb or both. And there's a section called questions where you just submit an inquiry and click send. And at the end of the webinar, as I mentioned, we will be reviewing all these questions. And for those that we don't have enough time to get to, don't worry, we'll have a chance to follow up after the webinar to answer your questions. Please also note that this webinar is being recorded. So in case you can't make it for the whole thing or you want to share a recording with your colleagues, we will be sharing a recording after the webinar. So today's webinar is hosted, as I mentioned, both by SimilarWeb and CrunchBase. Super excited to be doing this together with CrunchBase. From SimilarWeb, we have Ed Lavery joining the call with us today. Ed is an investment industry specialist at SimilarWeb with an interesting background in both investment banking and digital marketing. Ed, you here with us on the line?
Hi, Ed here. Yeah, so my background is investment banking and I'm based in London.
Thanks, Ed. And I'm here in the middle, Dan Hillier. I'm a product marketing manager at SimilarWeb. And I'm also really happy to introduce from the CrunchBase side, we have Karishma Bhatia, who is a product manager, and she helps to make amazing products that are basically used by tens of millions of people.
Thanks for the great introduction, Dan. I'm so excited to be here sharing our new SimilarWeb integration on CrunchBase and how it can help you guys.
Awesome. So let's start by diving right into a quick background into who SimilarWeb is and also how we collect the data that's really powering the insights that we're going to be looking at. So before I get into that, I actually want to take a quick step back and talk about not only who we are and what we do, but why we do it. So the business world, I would say, is just increasingly focused on being data-driven. And this mentality is, of course, changing the way that we work. So whether it be in marketing or sales or operations, we're really looking for ways to test new ideas or measure the performance. And then we double down on some of the strategies that are bringing the most value. But the problem is, a lot of times we're doing this in a vacuum. And so data-driven, for most businesses, really just means looking at performance of one thing to the next. And so there's really this fundamental lack of context. And so if a company is growing at, say, at 20%, this could be a really great statistic, but it doesn't actually have much value in and of itself. So the key to market intelligence is actually having the deep awareness and the context around a company's performance. So going back to that 20% that I mentioned, if your competitors are growing by 50%, that performance is no longer so impressive. So, you know, if you're growing by 5%, but your competitors are dropping by 10%, you know, this means that you're actually doing quite a good job. So the context is everything. It's really important. So market intelligence really brings the meaning and value to data by adding this context to your competitors, your industry, and the entire digital world. And so at SimilarWeb, we believe, you know, market intelligence is really critical to making better business decisions. And so better insights, better decisions is our slogan. And so what we come across time and time again is a lot of businesses aren't even aware of the level or the power of insights that are possible today. So we're really excited to dive into that in just a bit as we look at some actual insights, and just to kind of help you understand what SimilarWeb does and what we cover. As I mentioned, SimilarWeb is a digital market intelligence platform, but we span quite wide. So we're covering both web and app insights for basically every website, every app in the world. But we also cover industry insights and search and advertising insights. And so we'll be diving into all of these different types of intelligence and helping you guys understand where and how there are signals for company health, as well as where there are red flags, for example, when a company is disproportionately investing in media, for example. So SimilarWeb is not just unique as we cover every aspect of digital, but it's important to mention that we cover every country in the world. So all of our insights are for every website, every app in every country. Now, quickly, before I turn it over to CrunchBase, we always get a lot of questions about how we're able to do this. So I do want to spend just 2 minutes quickly covering about how SimilarWeb collects all of the data that we do and how we turn it into insights that are covering such a vast expanse. And so we actually take a pretty unique and I would say multi-dimensional approach to how we collect our data. As you can see, it's not just based on one specific source. So we collect data primarily from 4 different sources. As you can see from left to right, we have our global panel, which is actually a panel of hundreds of millions of global devices that allow us to analyze anonymous consumer behavior. We also work with global ISPs and other partners, as well as collecting information that's publicly available on the web. And then lastly, we leverage a growing data set of hundreds of thousands of sites and apps that are actually sharing their internal analytics. They're directly measured analytics like Google Analytics or Adobe Analytics. They share that directly with SimilarWeb. And so SimilarWeb is actually able to transform all of these data sources into intelligent estimations across all sites and all apps, as I mentioned, and across all geographies. But we're not just a data company. What's really important to us is that our customers and businesses are able to consume this data, and we build products like SimilarWeb Pro and Digital Insights and API that allow customers to access this in a digestible and actionable way. So this is how we collect our data. If you guys have more questions, we're happy to go into much further depth. And then lastly, what is it that SimilarWeb does for investors? We work across a lot of different industries, but specifically for investors, we work on both the private and public side. On the private side, we kind of help in 3 different phases. One is actually identifying new investment opportunities. So discovering up and coming players in any market and actually doing the proper due diligence, evaluating those companies with the greater context of the market, and then monitoring your existing investments, your existing portfolio, and helping those companies in your portfolio to actually grow. By using digital market intelligence, you can help to advise these companies on how best to grow, which in turn increases your bottom line and the profits on these investments. On the public side, we do work with a number of hedge funds and asset managers, and they're using SimilarWeb basically to understand historical performance, as well as almost near real-time data to assess the trajectory and digital health of a company, which allows them to decide, should I buy, sell, or hold. Now I'm going to turn it over to Karishma from CrunchBase.
Thanks, Dan. Okay, so let's kind of go over what CrunchBase is for those of our audience members that aren't familiar with CrunchBase. So CrunchBase is the primary source of company data. We have data from venture partners that we collect, which show company funding, that show rounds of investment, show fund data. We have all that stuff collected. We also have a crowdsourced platform where we let contributors from our open source community come in and add their own data. So if you're an owner of a company, or if you work at a company, or if you are familiar with a company, people come and add that information. And we also, based on that information, we have a full-time staff of data analysts who help us make sure that our information is well curated, that we're showing information, something that isn't misleading. So we try and give you the best information about companies possible. If we go to the next slide, we can show you how some of our users use this information. So you can see here, this is essentially Lyft on CrunchBase's site. You can see the basic information about them, and if you scroll further down on the page, you're able to see more information about funding rounds. You'll even be able to see some information from SimilarWeb. And all our data is refreshed in real time. So we have 4.9 million contributions every week to our database. We have 40 million website visits each year, and we have 23,000 profiles updated each week. So if you look at the sheer magnitude of data that we have information that's always up to date, always getting more of it, and we're trying to compile the best information on companies possible. But now the next question goes to, how large is this data? Is it only in the US? Is it only in Europe? Is it only in Asia? But as you can see here, based on this graph that we have, our data, it pretty much penetrates every continent in the world and a large majority of the countries. You can also see that our US data is very, very strong, but we have strong data in Asia, in Europe, in South America, and our database, as you saw earlier, it keeps growing, and we're adding more and more over time. So if we go to the next slide, we can also say, so now that we have all this data, how can investors and our key users use it to find leads? So we introduced a tool called CrunchBase Pro, and there's a few things that this product gives you, but the main feature that I like to talk about is search. So now you have companies, you have people, you have investments, funding rounds, acquisitions, schools, universities. The ability to search across all of those in a multifaceted way is really the power of our platform. So you can see here that we've created this complex search on schools and organizations, and trying to find information that is specific to what I'm looking for. So I can look for companies in a certain category that have Series B funding over a certain amount as of last year, or as of this year, or whatever my date range is. I can be even more specific and say I want a company in a certain area, a certain location. And that list will be in real time created for me. And then I can go ahead and I can save the list. I can get notifications on new additions to that list. I can export it to a CSV and do changes and manipulations in Excel. I can upload it to other tools that I use. But this is really, really powerful, because now you have the power of our entire platform right at your fingertips, and you're able to find the companies that matter to you, find the leads that matter to you. And that's the real power that we have to offer with CrunchBase Pro. So now it really becomes a question of, okay, how can we unlock this data for investors? What data do we have to offer, especially with our partnership with SimilarWeb? And what types of searches can we do, and what types of alternate data sources can we really leverage with SimilarWeb plus CrunchBase? So we have a couple examples. So earlier I showed you Lyft and the company profile. So now this is Apple, another one of our companies, and you can see that there's a card for SimilarWeb. And this card is really great for investors because it shows at a company level how many visits the company has, their monthly growth rate of visits, as well as what's the breakdown of the top 5 most popular countries that visit the site, that visit apple.com. So you can see here that apple.com, it looks like US, Japan, China, UK, France are the most popular types of visitors for Apple. And you can see that they have a pretty high monthly visit rate, pretty high monthly visit growth rate. And we also have a second tab that shows overall engagement, which shows things like things you're used to seeing on SimilarWeb but can now see on CrunchBase as well. So things like bounce rate and global rank and average page views you can also see in that tab. And so this really gives a full perspective of a company now. You have information on funding round right above this. You have information on investments right below this. And you can clearly see how popular this company's website is and how much traffic they really do generate. So we go to the next slide. Yeah, this is a snippet of what I was talking about earlier, where you can see visit duration growth month over month, how this company is ranking against other companies from SimilarWeb. So all the data that you're used to seeing in SimilarWeb is now in CrunchBase. And the next slide is actually what I think is really cool. So now I mentioned, earlier that you can search companies for funding rounds, for categories, essentially any data that's in CrunchBase. But now with our SimilarWeb partnership, you can add and search for fields from SimilarWeb. So now you can say, okay, growth is based on their last funding round. But instead of using that, now you can also use month over month visit growth. You can also use average visit duration. So if you can see this search here, essentially what we're looking for is we're looking for a company that has 500,000 plus visitors as their 6-month average and has monthly visit growth of 10%. So they're on average growing their monthly visits by 10% every single month, which is a pretty high number. And they're in the commerce and shopping category, and their total funding amount was about 500 million. So this really shows you the power of both platforms. Now I can search for companies that are in my investment range, that are in a range that I want to invest in, or of the type that I want to invest in, and that have staggering growth rates. And this really brings the power together for investors. And again, with my pro search that I have here, I can go ahead and export it. I can go ahead and save it. I can go ahead and click into each of these companies to get more information about them. I can customize my columns, customize my view. There's a lot of customization that can happen here, and a lot of power. Yeah.
Sorry, and the point, thing I wanted to add to this is that it's really, really important, and I'm sure this is an issue that many of you have come across when you're looking at private companies and looking at to invest in them, particularly the targets, the competitors, or the peer sets, that there is so little information available about private companies. And this is really where alternative data sources are really, really key in order to understand things like size, development, market presence, when there is no financial information there. And another thing that I'm sure many of you have come across is that even when there are financials reported in a company, there's normally quite a long delay from when the results are released. So take, for example, fiscal year 2017, it may not be to the end of the year, May, June, July, when some of their reports or filings are made public, if they are made public. So to put that into context, so performance in January last year, you may not know what's happened until 15, 16, 18 months down the line. And it's already out of date by the time you get the information. And I think this actually brings us really nicely to the first case study, Wish. So just to provide a bit of background, so just in case you're not familiar with the company, so Wish.com is the 6th largest e-commerce platform in the world. And it is a similar business model to eBay, but focusing on discounted goods. So a bit more context. So by the end of 2016, Wish had raised over about $1 billion during the $1 billion, which was focusing on its mobile platform. And the following 12 months, the business spent consolidating its success as being one of the leading mobile e-commerce platforms in the US. And what SimilarWeb allows you to see is this progress happening month by month. So you can see by Q4, so September, October time in 2016, growth in total visits in the US is dramatically increasing. And this growth in visits is sustained throughout the course of 2017 with substantially higher month-over-month growth. So I think the next question to ask if you're an investor is, how is it growing and where is it coming from? So just like when you look at revenue on a business, you need to know where that revenue is coming from. You need to understand whether it's sustainable revenue, is it costly, is it durable? And it's exactly the same premise for digital as well. So when we look at Wish, is this genuine traffic growth? Is it sustainable, or are they paying for this growth? And there's a few ways of being able to assess this, and this is something that the SimilarWeb platform allows you to look at, and it's understanding the traffic source of the business. So for those of you who may not be familiar with this kind of analysis, starting with direct. So direct traffic is essentially visitors who go directly to wish.com. They don't go through Google, they just type it directly in their URL bar. And what we can see with Wish is that over 50% of its traffic is coming through direct. And this is an amazing indicator of brand strength. The other channels to be focusing on as well are marketing channels. So these channels would be things like costly channels as well. So these things would be like paid search, display ads, email, sometimes referrals and social as well. But it seems at the moment, Wish is actually more dependent on its brand strength than needing to invest in marketing. So for back one slide, sorry. So just after direct, search is actually the second most important channel, which delivers 18% of its traffic. And I'll come on to this in a moment. But from an investment perspective, why is this important? It's important so you can understand the brand strength and the brand awareness in the business. If you were to invest in it, do you need to support it in methods to improve this as well? However, if I were to put my founder's hat on here and look at the same data in a slightly different way, and let's say that I am the CEO of a competitor business such as Top Hatter, what I can deduce is that Wish, being one of the largest e-commerce platforms in the market, I want to emulate it, and I want to do it in such a way that it would entice investment. So as a founder, what I need to do then is starting investing in my brand awareness. But the other way I could do it is also using search, which is the second most important channel here. So remember that I said search was very important for Wish. What SimilarWeb can do is tell you the actual keywords that are driving traffic to the site. And we can see here that Wish is actually using a lot of non-branded generic key terms such as fidget spinner and prom dresses and also solar eclipse glasses to grow. So as an investor, how do I view this kind of information? Why is this important to see what words Wish is using to draw traffic to the website? Because one thing you may consider is that using generic terms like this, is it actually a sustainable strategy? From an SEO perspective, it's really expensive targeting generic terms because so many sites will be competing against the same words that you're using. So some of these products, such as fidget spinners, solar eclipse glasses, come in and out of fashion. And the latter, eclipse glasses, I'm sure will not be in use next year as well. But despite these being generic terms, maybe you might view this as being quite a good product strategy or a keyword strategy. And you may think, as long as Wish, the business I'm investing in, keeps these terms up to date, then it might be a sustainable business model. However, if they don't, this leaves the company very open and subject to competition. So putting my founder's hat back on quickly again, what can I draw from these key terms? And the thing that I can discern from this is actually the products that Wish is selling. And I may want to align my product strategy based on the kind of words that people are searching for to get on the website to be more in line with the market leader. So with Wish, we've looked so far at understanding month-to-month growth in terms of traffic, where this traffic comes from, why that's important, and also the product mix of the business. The next thing I want to focus on is geographic development. So as Dan mentioned earlier, SimilarWeb collects data all over the world. So everything that I have shown you just now, can be regionalized. You can see where the traffic is coming from by market. You can see where the product mix, the marketing mix is by market. So if we look at Wish's performance outside the US, we can see that France is one of the largest regions for Wish, and Brazil being number 2, but also one of the fastest growing markets, having nearly doubled in visits from 2016 to 2017. And similarly to Germany, which has had a very similar growth rate. So investing in a business like this and being able to use SimilarWeb data to understand regional growth, which will be difficult to find being a private company, it's great to know that the business is diversifying. And it's really useful to know at the rate it's diversifying. So for a platform business like Wish, you could justify the fact that it is a sustainable and scalable business model that can be expanded internationally.
So what's interesting to see here, though, is that if you see Wish's funding over time, you'll see that they, got their first round of angel investment in 2011. But at the end of 2016, that's when they got a pretty big lump sum for their Series F round. And that also correlates to when they started to see a lot of spike in traffic, a lot of spike in new visitors, and growth across various companies or countries. And so with that, we can see that maybe, some of that money that they used was spent on marketing or spent on search traffic to get that increase in growth. And if we go to the next slide, it's actually interesting if you put your founder hat back on to benchmark your company against Wish, or to benchmark other companies against Wish. So on CrunchBase, you can do a search that says, show me all companies that are in the category that Wish is in, and show me how their monthly visit growth compares to Wish. So you can see Wish is at 5.6%, and there are some competitors that are higher, some competitors that are lower, and you can also see their total funding comparison. And with that, you can really get a good gauge of how they're doing in the marketplace, how they're doing based on their competition with SimilarWeb data in CrunchBase as a key indicator.
So the next case study that we want to look at is 23andMe. So 23andMe is partly a DNA testing kit company. So consumers can send off a DNA sample, having ordered it online, and they can learn a bit more about their ancestry. However, recently, over the past few years, it's been more moving down into the medical research side of things. In 2017, they received $250 million Series F funding in an investment round led by Sequoia. So they're a fast-growing business. So to provide a bit of a similar overview as before, to be showed with Wish, we can see that the company is growing substantially, has grown substantially in 2017 in the US, with strong growth rates throughout the year. And to Dan's point earlier, it's really important looking at data in context as well. So how your numbers are performing in line with the market as well. So for an investor, if you're valuing a business and you want to understand its prospects, it's really important to look at its market share growth. SimilarWeb offers you the ability to map out entire markets. So these can either be custom markets or pre-made markets as well. And you can see who's growing in share. So this chart in front of you right now, this is a custom category at the moment. So this custom category is constituted with 23andMe, MyHeritage, Ancestry, peers within the group, and also Color.com and Helix.com. And all of these businesses are operating in the consumer genetic DNA testing market. So what you can see here is that Ancestry dominates the category, but 23andMe and MyHeritage have stolen a lot of share from the market leader. And the market leader, Ancestry, has decreased its share by about 10% over the period of 2 years. Color and Helix had a minimal impact within this set, so you can't really see much of them at all. 23andMe doubled its share. And they did this within the past year or so, growing from about 6 or 7% to 13%. And you may, those of you who are based in the US, may have noticed a lot of offline advertising and the name becoming a much more prominent brand name. MyHeritage, on the other hand, has remained relatively stable during the year. So if I was a founder, how can I view this? And well, obviously, knowing your market positioning and your market share is crucial. But what you may want to do is monitor going back at which point in time your competitor peer set hit a certain market share, and what impact this may have had on the valuation round and also the valuation multiple that this delivered. So an investor also may want to home in a little bit more detail and actually look at period over period change and understand when the peak seasons are. So peak season within this market is around the holiday season, so Q4. And this chart shows year over year quarterly growth. So 2016 Q4 versus 2015, Ancestry grew the most substantially. And 23andMe was much lower, ranked number 3 in terms of growth in number of visits. However, in Q4 2017 versus Q4 2016, this completely inversed, and 23andMe had the highest growth in number of visits, whereas Ancestry actually declined over this. So if you're a founder or an investor backing a business and you want to enter a new market, SimilarWeb is really good for understanding when the seasonality is within that market, but it can also help you who is winning within that period. So if looking at quarter-over-quarter is too long or larger periods for you to look at, and if that wasn't enough, you can SimilarWeb can actually take you even deeper and show you daily data. I can't really even think of many other data sets out there that tell you daily performance of private companies. So here, around Cyber Monday, this is November 2017, growth on Black Friday in terms of increase above average number of visits for the month, for Black Friday was 70%, whereas Cyber Monday was 94%. This is amazing. So you can actually compare year over year and day over day performance of these private businesses. So for founders of your competitor set, you can actually benchmark what you could be achieving by the leaders in the market. So we've talked about traffic at the moment, with Wish predominantly and also 23andMe. But there's other ways of looking at business performance and its growth. What is great about digital data, it allows you to take it one step further and look at brand and product sentiment through the customer's eyes and how this is actually growing over time. And the way we're going to look at it in this example is through keywords. So the charts that you have here in front of you is the search volume split for all search for the competitor set. So dark blue is 23andMe, orange is Heritage, and red is Ancestry. And it's broken down by the volume, the share is done by the volume of keywords, and the order of them is ranking done by volume as well. So in November 2016, 23andMe was the 4th most searched term of all search traffic to these websites. And DNA testing was the 7th most searched term. However, in November 2017, so a year later, 23andMe ranks number 2, whilst DNA testing ranks number 9. So what does this actually mean? It means that customers are interacting more with the brand 23andMe, than they are with generic terms such as DNA testing. And DNA testing actually lost share. So this is an indicator that the market and the customers are maturing, that brands are actually becoming more meaningful for consumers to interact with than the industry itself. shown by the decline in generic product terms.
Yeah, and I just want to mention, when we're looking at these search keywords, it's important to kind of remember what I mentioned in the beginning of this webinar about our methodology, that this is actually coming from a panel of hundreds of millions of consumer devices. So these are real searches that we're able to understand consumer behavior from. So it's not necessarily that we're going and scraping websites or scraping Google. This is actual behavior that's coming from a very, very, very large panel.
So what's interesting to see here, though, is that we have information on 23andMe and their funding over time. As we saw in the previous slide, their search traffic, spiked in 2017 as a result, as potentially a result of their Series F funding, where they got the largest sum of money that they've had in all their investments. And that's a way that we can kind of benchmark and better understand how the company is spending their money, or how the company is seeing growth from their investments. And as an investor, that's important to know that there's actual results coming out of this money that has been invested in them. And using SimilarWeb to do that as a benchmark is a great tool, and especially with the SimilarWeb data that we have in CrunchBase. So here we can do a similar analysis to what we did for Wish, which was saying, okay, we understand where Wish's benchmark is, but how does that really compare to all their other private competitors in their same market space? And that's where the CrunchBase data and SimilarWeb data really come together, because now you can see, okay, I have a pool of all these competitors of 23andMe that are in the same space, that have funding as of a year ago, so they're actively being invested in. And where do they stand in terms of monthly visits growth? Where do they stand in terms of traffic growth, or in terms of total funding? How large is the company, and how aggressive are they in terms of growing their traffic with that funding? And it's a really good way to see that 23andMe is very high in this category as a key investment.
Perfect. Thanks so much, Karishma. So you guys had a lot of questions, and we'll just jump into the Q&A in a second. But in case you want to reach out to us and have a more in-depth conversation, we'd love to have that. So you can reach out for SimilarWeb at sales@similarweb.com, and for CrunchBase, sales@crunchbase.com. Now I wanted to dive into the Q&A section. So let's start with a question that we've got from Vinay, which is asking about the accuracy of SimilarWeb data, particularly for web and app. So I'll quickly answer that question. So how accurate is your data for web and app? Really great question. And I think without the accuracy level, we wouldn't be where we are today. So we have a few thousand customers, paying customers for SimilarWeb. We work with some of the biggest brands in the world, like Walmart, like P&G, like T. Rowe Price, and accuracy is really, really critical to us. And so I think it's something that we can definitely discuss one-on-one, and we do very in-depth validation tests with our customers, and we have a team of about 150 R&D and data researchers in our headquarters. So that's the sort of the basis of our company, and accuracy is really, really critical for us. So thanks for that question. Next question, this is for CrunchBase. Is your search based on top of Elasticsearch?
Yeah, so our search is partially powered by Elasticsearch. So you do get very fast results. That's something that our platform is built on. Most search results happen within a second. It's very, very fast. And that enables users to get real-time results on exactly what they're looking for.
Great. And another one for CrunchBase. On CrunchBase Pro, this is from Fernando. Are there any revenue-related metrics available?
So as of right now, there are no direct revenue-related metrics. We show metrics around funding and how much money the company has gotten through their various rounds. But that doesn't mean that in the future we won't be showing revenue data or other financial data. We're constantly trying to grow our set of data that we have.
Great. And then a question from Jake about integrations with Salesforce. Does Crunchbase and SimilarWeb have Salesforce integrations? I'll quickly answer the SimilarWeb side, and then I'll turn over that to you, Karishma, for Crunchbase. SimilarWeb is working on, in 2018, actually expanding our integrations with many, many different companies. SimilarWeb, all the information that we have in our paid platform is also available via an API. So a lot of, especially our investors, are using the API or Excel. And so the API can actually be integrated directly into Salesforce, but we don't have an official integration with Salesforce yet, but hoping that is coming in 2018.
Great, and from a Crunchbase standpoint, we do have an integration to Salesforce, and that's only on the Crunchbase data, so no partner data is sent through that integration at this point. We also have an API that has all of our data, so if you'd prefer to use that, the best way to learn more about that is to contact sales@crunchbase.com, and they'll be more than happy to show you a demo and get you set up with that for your company.
Great. And a question from Elizabeth, which is, do your traffic numbers take into account mobile traffic as well? And is it broken out by device or platform, excuse me, iOS versus Android? So I will give that a shot, and Ed, feel free to add anything if you'd like. So SimilarWeb is a cross-platform company. So we have insights on desktop, mobile web, and mobile app. And so you will see our insights broken out by desktop and mobile web. And on mobile app side, we focus primarily on the Android side of things. We're working on expanding our iOS coverage, but primarily our platform is Android based now, but expecting to kind of build that out on the iOS side as well. Yep. Looks like we've got time for another one or two questions. I know there's quite a few more, so we're not going to be able to get to all of them, but as I mentioned, we'll be happy to take these offline. And so let's see. Yeah, good question from Eric. Are there any examples of good red flags for when a company is having trouble? So maybe, Ed, I'll let you answer that, and Krishma, if you have anything as well, feel free.
Sure. So, I mean, obviously, on a high-level view, a decrease in traffic is never a great sign. However, real key indicators when looking online is a decline in engagement. So this could be an increased bounce rate. So bounce rate being the number of visitors or the percentage of visitors who only visit one page on the website and don't visit any other. So if it's an e-commerce platform, if they're visiting one page, they're not going to be able to visit. They're not going to be reaching the payment page at all. Other things to note that they might be in trouble is if they are investing really heavily or starting to invest very heavily within paid channels such as display ads or paid search in order to start increasing their traffic, and they're not seeing any engagement through these channels as well.
Yeah, definitely. And so that can also be an indicator of reduced profits, right? So if a company is suddenly making large investments, and we actually did an analysis on Bankrate, and we saw that they were investing significantly in paid channels and paid search and paid advertising. And then when they released their quarterly reports, we saw that their profits indeed were significantly impacted, and they actually mentioned that significant marketing expenses severely cut into their profit margin. So it's something to consider as well.
And sorry, just got to add one more to that. So we released a blog, I think about 6 months ago, about the IPO of Blue Apron, and we'd been tracking in the months in advance that visitors were visiting the website less often. So we could see this through the ratio of visits versus unique visitors. And as soon as the IPO happened, the share price tanked very, very soon afterwards. And one of the key reasons was that they had poor customer retention. So we were able to see this within our data.
Right.
Yeah, and that's something key that even in some of the CrunchBase data that we have, you can be able to see like if there's a down round in funding, that's a key indicator. Something else that we also use here is we can see traffic trends by country. And so if there's ever a downturn in a country that had a lot of traffic from that site, that's also something that could be a pretty interesting indicator.
Great, thank you, Karishma. And so last question, this is for you, Karishma. For CrunchBase Pro, how often do you see your alerts weekly or daily with new notifications?
Sorry about that, I had a problem with my mute button. You can actually set up either daily or weekly for your list to see when things change. You can also sign up for our CrunchBase Daily newsletter, which is a newsletter that gets sent out every day, and we give updates on our own curated news, as well as new things that are happening in the tech community and startups, recent rounds of funding. We also do a weekend newsletter, so you get a larger copy of that with more information at the end of every week. So various modes of communication. You can manage all of that from your CrunchBase Pro notification settings.
Awesome. So that is going to wrap it up for the Q&A. Thank you guys so much for joining our webinar. Thank you, Ed and Karishma. This was really, really fun to co-host with CrunchBase and with you guys. We are going to share the recording of the webinar with everyone, and we'd love to have conversations with you guys. I'm sorry we weren't able to get up to all these questions, but we're happy to answer these questions and take them offline. Have a great day, everybody, and a great weekend.